being there. Then what is the other one? I forgot. Orion City again. I can't remember the name. Virtusa, and then there was another one, MIT. So that sector.
So general technology sector is doing quite well.
Any particular reason why they prefer Sri Lanka for technology, as in software? Because it's actually booming.
So if you look at it, Machan, you get a lot of Scandinavian and Nordic companies.
Right.
There's a company called Ascentic, Gapstars. There's several, and they have over 100 plus to even some 200 plus employees. So what they do is during winter, all of them are here. So half these people who are surfing in Hangam and all of them are actually tech.
Half of them should be Sanka's friends then.
Half of them are there, Machan. So because for them, so they do all the work here, but they cater to those markets. So it's good for Sri Lankans because now you're getting a foreign kind of it's not exact salary, but then because there has to be a cost benefit, but it's still much more better than here, right? And they get to travel to those, and they interact with those customers. So they completely serve the Nordic market or the Scandinavian market.
Right.
So you have those advantages. US, we don't have much. There are few companies, but the biggest challenge with the US market is the distance and the time difference.
It's almost.
And US is also a market where you have to have boots on the ground. So there are, because, there's good and bad. One is like US, everything is big. Whether it's vehicle or food or women or whatever, even the deals are big. Deals are massive, right? Like $1 million deal is considered extremely small.
If, say for example, I had a tech idea and I've got something going, how does one get about finding these seed funders? How do I get identified?
So essentially, the first thing that I want to say is that you don't require funding to start a business.
Right.
Yeah.
Any business. Right. That's number one. A lot of people feel that, because now it becomes FOMO, right? Or I have to go and raise money, then I'm a legitimate business sort of a business, which is not the case.
Yeah, there is a sort of an idea that securing funding is
the success.
Is a seal of approval for your business.
Absolutely, which is not the case.
Thank you.
True.
You have to first start a business. You have to try whatever it is. You need to get a little bit of what we call traction, which means customers, people coming and doing business with you. Only when you kind of prove that you are capable, there is a business opportunity, then raising capital becomes a lot more easier.
Right.
Raising capital without anything is almost extremely hard and extremely impossible in most markets.
Right. Yes.
Right. Unless you are an entrepreneur who has already built, scaled, exited, and now you're starting a second company, then now you have a track record, you have a profile, then people want to bet on you again because, there is some data around your capabilities.
Right. Yes.
So the first thing that I want to say is no matter what business, whether it's technology or whether you want to start a cupcake business, you shouldn't really look at raising capital. You should just go do it. See what it is. Now, we were talking earlier about the US and how we are this thing. So this is where the big difference I see is that in US, like kids do lemonade stands, they do paper routes, they start earning money very early. Which in our time was sort of a taboo thing. You're a student, you're supposed to go, learn, study. You're not supposed to earn anything. Right? You might do a little bit of here and there, but it's not a business. You would do a task. I used to polish the floor and then I'll get something.
You get something, yes.
Which is like child labor.
Right? It's like more like you do your chores and make some money.
Make some money.
That's
not a business. No, if you want to do a lemonade stand, doing a lemonade stand is super hard. Like you gotta go, you gotta buy all the ingredients, you gotta make the lemonade. You need to understand how much of money you spend, how much are you gonna sell it to, what's that margin. That's the whole idea.
What time you're selling.
What time you're selling, who's your customer, So there's a lot of things that you learn in that simple activity, for the lack of better word. which we don't do, right? Most of us don't do that until we are like 24, 25, probably late 20s. And in the US and all, they'll do it when they're like 10. So you see the massive. Right? So you don't need, coming back to the point, you don't need funding. Now, if you look at us, we are very, very specific. So we primarily look at B2B businesses.
Right.
Right? Even within B2B businesses, we only look at what we call fintech, so financial related. And this goes back to usually a VC fund will have a thesis.
Right.
The thesis is, okay, we operate in this kind of framework. Right? And it goes back to the point that I said, for me, it was about financial literacy, financial independence, which leads to, freedom. And so that's why we are focusing on fintech. That was one of the reasons. The second reason being, we understood fintech a little bit better than the other industries.
Right.
And you need to have a little bit of domain expertise in it. Because our first investment was actually in education, and I've done agriculture, I've done education. And out of all of this, I felt very comfortable, or we felt very comfortable with fintech. And when you come to us, I spend quite a lot of time with the founders. I like to understand who they are, why they're starting the business, how do they hire people, how do they fire people, what's happening on the background. So there's a lot of personal, time that I spend and collect certain nuances from these signals, what we call, before we do a few full-on due diligence of the company. Right. And for anybody who's listening this, the question that everybody, like any entrepreneur, have is, what do I need to do to attract capital?
Correct.
That's the fundamental question.
Correct.
Everybody has,
Everybody
right?
wants to know
irrespective of what you're doing.
Yes.
How you attract capital is very simple. You first and foremost have to be attractive. How do you attract anyone or anything? Is first you got to be attractive. So what does being attractive mean for you in the business that you're doing? That's what you need to understand.
Right. So it's different from one to another.
One to one, right? So if somebody comes and we were having these workshops for some of our portfolio companies yesterday. Somebody was asking about traction. How much of traction should I have? Again, that changes. So for an example, and taking a layman's example, if you come to me and say, oh, I have 1 million customers, that's great. That's a good number, large number. But then when I look at it, okay, you spend about, 10 years to get to that million customers. Then somebody else comes who's also doing the same business. He spent about 3 months, but has about 100,000 customers already. Now that business to me is a bit more attractive. I would try to understand how did you do this in a shorter time. So it's not just the fact that this person A has 1 million, how much time did they take, how soon you learn. And those are the entrepreneurial skills. So, being an entrepreneur, if you need to be a little bit arrogant, but that arrogance is, I would say, is a very, very thin line, right? You have to be very coachable as well. Otherwise, if you're saying, no, this is my way or the highway, and you're not changing, you're not going to learn from the market. The person who is a little bit more adaptable, who is open for mentoring, who understands some of these feedback and change their approach, will grow better.
Correct.
Right.
So that's what I'm really looking at.
I think also, Chalinda, I think that attitude sort of stems from this fairy tale of Steve Jobs.
Oh yeah.
Being this maverick who didn't listen to anybody and had his own vision.
Yeah.
So I think not everybody is a Steve Jobs. But and also one thing that I heard quite recently, Levanjit, also is this. I heard for a successful business to be, there has to be a great product. There has to be somebody doing marketing,
Yeah.
and the other guy on finance.
Yeah.
Right.
Yeah.
These are the three skills you need
Yeah.
to balance. Right. So this guy who was also a person who helps startups. Right. He spent his entire life. I can't remember the interview. I'll send it to you later. He said that he has found people with 2 of those skills, but never all 3.
Yeah, 100%.
Is that something that you also see?
100%. I think a lot of people get caught in celebrity type of founders like Steve Jobs or Elon Musk or
Mark Cuban.
Mark, yeah. And that's fine. You can learn quite a lot from them, but they are ones they are anomalies or they're outside. They're an exception to the norm. Right. And if you as an entrepreneur again, this is very personal, right? If your approach is to be that exception, you're significantly reducing your chances or your opportunities to be successful because you're trying to be an exception. You're not trying to, ride the wave again. So I'm all about riding the wave, right? I want to understand people. So yes, you can learn some of these things from them.
Yeah.
And also, I think any person, irrespective of whether they're an entrepreneur or not, you want to try and define what success means to you. Right. So
Correct.
if you look at a lot of these people and if you look at their personal lives, it's a shit show.
Correct.
Right. So is that what you want? Because that's what you have to sacrifice to get to that stage, right? And I've had this, like, for the longest time, when we were studying or whatever, I wanted that seat at the table. And I want to be in that boys club because that's all what we saw, we listened to it or whatever, read in the magazines. And for me, once I had my foot on the door, and then when I finally had the seat in the table, I realized that, oh shit, I don't want to be in this. Right? I realized it's not me.
Yeah, and also like TV and movies romanticize the seat at the
A lot of it, right?
Yeah.
It's good if it's the state. I mean, there's nothing wrong with it. It's the status, it's the glam, it's the attention that you want. By all means, go for it. So you want to try and kind of figure out that early on again. Again, going back to my previous example, the earlier you figure this shit out,
The better it is.
the better it is, right? You'll have less regrets as you go old. With regards to like building any company, it's very simple. The reason why majority of the companies fail is because of poor sales. That's it. So you need somebody who can sell. And as an entrepreneur, you have to be a salesperson because you are that's your brand.
Correct.
You don't have your company doesn't have a brand. People are going to come and work with you because of you and you alone.
Exactly.
Whatever your, whether it's your integrity and all of that. So you have to be able to sell. So whether it's LinkedIn or Facebook or Instagram, these are your sales you can do. You need, and if you're a tech company, you need somebody who can build stuff fairly efficient. And then the third one is you need somebody who can make sure to put all these things together, the finance side of things. I think finance is super interesting. It's very, very important. And I'll give you some stats, right? So Sri Lanka has, and as you all know, Sri Lanka's literacy rate is among the highest in Asia.
Correct.
Right? But if you look at our financial literacy, it's below 35%.
Oh my gosh.
Right? Which is strange because Sri Lanka is also known for producing the most number of, I think, CIMA graduates outside the UK. We are also known for producing the most number of ACCA, AAT, all these 3-letter, 4-letter finance-related professions that are there because we are very good with our numbers. But our financial literacy is poor, right? And this is the same thing if you go back to, March of 2020, people woke up and realized that, 30%, 40% of their savings vanished purely because they didn't understand what inflation was. I don't think people still understand what inflation is, but at least people know that if inflation is high, then it's bad news. Right? So they understand some version of it. So you need to know, if you're being an entrepreneur, again, this is irrespective of whether you're building a technology company or whatever it is, you need to understand finance. You need to understand what's the difference between a balance sheet, a P&L, and a cash flow statement. You need to understand the fundamentals of economics. It doesn't matter what your profession is, whether you're a doctor or a lawyer or engineer or whatever you're doing. You need, the sooner you learn these things, and this is again, it goes back to our education system. We never learn how to manage finance up until we start working.
Yeah, that's right.
Right. So it's a bit too late. I think now it's changing. Now it's still not taught, at least to my knowledge.
I think there's now a subject called entrepreneurship. No?
So that's good. But if I don't know whether they're covering how do you manage your finances.
I don't know what exactly this covers, but
but my argument to that is this information is freely available online. So you don't have to wait till somebody teaches you. You can go and do it. And if you don't do that, again, you're the one who's going to suffer. Right? So, I do this with some of these kids and all. There's this whole concept of 50-20-30 or 50-30-20, whatever, which is from your income, 50% goes into savings, 30% into your needs, and 20% into investments. It's a basic fundamental thing. A lot of people don't know this, right? And I think again, people complain about inflation and all of these things. I don't know whether it's inflation or whether it's, so there's two things, right? There's cost of living and then there's cost of lifestyle. I think Sri Lankans live far above their means, way above their means, and that's why they are in a difficult situation, because they're trying to please people that they don't like by buying better clothes, driving a better car, living in Colombo, buying all of these things. They're following trends.
Correct.
And then they are getting more and more miserable. But yeah.
So Chalinda, so when you do decide to pick a particular, let's say, a prodigal business, how much do you all get involved in? As in, do you manage the risk aspect of it? Do you manage the financial aspect of that particular business as well?
Right. No. So most of all our investments are minority shareholding, right? In some businesses, we might take a board seat, but majority of them we don't take a board seat.
Right.
We let the founders run the show. They have to run. We don't get operationally involved. We do provide certain strategic oversight, guidance, and like I have a team of a couple of financial analysts, so they can use our financial analysts to do your projections and all of these things. So we want the founders to come to us. We don't go and pair on them.
Right. That's
right. But again, usually people only come when the shit hits the ceiling, right? By that time, most of the time it's too late, or then you have to kind of figure out certain ways and so on. But to answer your question, no.
Okay.
But we do have certain guardrails,
right?
Board meetings or whatever. So we get all the companies to have their finance on either QuickBooks or a Xero. Then we have a view access, so we can do our own analytics.
And have you all adopted any strategies to safeguard yourselves as a company with regard to, say, for example, if you do invest in someone and that person decides to just jump ship or disappear after collecting a certain percentage of the investment?
So we do usual shareholders agreements and all of that, but also the way that we are structured, like I said, with the Singaporean license and all of that, certain aspects are also there. So my usual, like when we speak to other investors, investors will say that, oh, I want a board seat, I want to have this kind of discretionary oversight and all of that. Veto rights and all of that. My usual feedback or belief is that if you feel that you need to have all these things, you should not do the investment.
This is true. Okay.
Right? Like I would look at it from that standpoint. If you feel that, okay, I want to have a board seat, I want to know how you're spending your money, how much you're taking as a salary, and where are you paying, I want to see all these bills. If you're paranoid about those things, I think that's fine. Maybe you should not do the investment. So we don't have a lot of risk capital because we have money markets and all of these things, which will give you a better return. So this whole venture space is a high risk, high reward kind of this thing. So I know a lot of people say that investing in startups is like an asset class. I don't like that statement. I would not put startups as an asset class. You gotta be super crazy to get into startups.
Comes with its fireworks.
Yeah, and it's the fastest way that you can lose your money. Right? So you should not invest. But it's also the best way to build the future, change the future, do something really kind of meaningful also. So you have to kind of prioritize that, and that's why you should get into this business, not so much about getting returns and all of that. Because I think there are various advantages.
Oh yeah, there's plenty of ways to make money with money.
Yeah.
And also, is there like a way to cash out after, say, a particular period if the I forget the term now.
Yeah.
The party that actually did,
So
received
usually
the investment.
the exit, right?
Exit,
so
yes.
The exit comes in the forms of either it's a trade sale or a merger or acquisition or an IPO.
Right.
Those are the three kind of ways of exiting an investment. And you have to work for it. So we had an exit last year of one of our portfolio companies so that was again, we invested literally on a presentation. It's just two guys, just like you coming, they pitched an idea, just a presentation, no product, whatever. We liked it, we put in money, right? We put in about $100,000, I think.
Wow.
And then in 18 months or 20 months, they got acquired by another startup that raised quite a lot of money. And when that acquisition came, we exited. We took our money. We had about 2x on this thing, which is about 48% IRR. We exited, but then those two guys are now part of a larger. They also grew here, Sri Lanka. Right? So that's the whole idea. Just to give you an idea, they would have gotten, I don't know, maybe about $1,000 a month. Now they're getting more than $10K a month.
Wow.
Right. So that's why I said it's financial freedom. Right now they're part of a bigger company. They're hiring more people in Sri Lanka. They're building a bigger product. So that's the value of being in a startup and riding that way. So everybody's happy.
So the usual call options and put options and things like this is not a concept.
I mean, we have those in agreements, but it's not a case that.
That's not the
ideal way of doing it. Like even some companies, we have a board seat, but we haven't appointed anybody.
Thank you, Chalinda. Finally, we made this happen while.
Thank you so much for joining us.
Not a problem. Thank you. This is super
fun. I know
fun.
you're a very busy guy and really appreciate taking time to talk about this. And I think it adds real value to our audience to hear someone like you speak, because not a lot of people have the kind of exposure you do. And we are very thankful for.
Indeed.
No, thank you for inviting me. I think it's these things you have to do it right. I think that's how you give back.
Correct. And I actually learned a lot of our conversation today.
Yeah,
it was very insightful.
Yeah, all of us have had painful journeys. So how do you kind of make it a little less painful for the next generation? That's a whole thing, right? That's all you can do actually. So I'm happy to do that, and thank you once again for inviting me. It's been super fun.